Welcome to the REI Foundation podcast, where we cover all the steps and strategies to make your real estate dreams a reality. Now your hosts, Jason and Peely.
Well, hi there, and welcome again to the Real Estate Investing Foundation podcast with Jason and Peely. Thank you so much for your listening time. Thank you so much for all of you listeners out there that have given us such great ratings and reviews on iTunes. And if you like what you hear today, please go to iTunes and give us even another 5-star rating and review. And we are so excited today to welcome Holly Williams to the show. Holly, how are you?
I'm doing great. How are you?
Doing amazing. And a little bit more about Holly. Holly is the principal of MQ Ventures, which as a general partner, she has been in over $100 million in multifamily apartment community investments. And in addition to her multifamily holdings, Holly has been a real estate investor for over 20 years, and her active real estate portfolio includes rental apartments in Brooklyn, New York, single-family homes and land holdings in New Orleans and upstate New York, and passive investments in, get this, Ohio, South Carolina, and Texas. Wow, so that's quite an extensive background, and I know there's a ton more behind that. And today we're really going to focus on two very important topics about basically raising money and raising money specifically targeted for multifamily holdings. But before we dive into that, how did you first get started in real estate?
I was an investor. My focus was on my career. I was in advertising and marketing and market research sales. So I spent years at Arbitron, then advertising sales at America Online back in the day, and ComScore, the internet ratings company, then Kantar, the big multinational research firm. So my whole career has been 25 years in Dallas, Texas, and New York. Mostly New York. I came to New York in 1990 for a job that was just to last a year. They were going to move me back down to Dallas, and I ended up going, oh my God, this is just so great. So bought an apartment in Manhattan, lived there happily, and I met my husband, who's a New Yorker, and a retired NYPD sergeant, by the way. Spent my whole life trying to avoid the police, and then I married one. So he drugged me across the bridge to Brooklyn. We renovated a 4-family house, and life is good. We have a 14-year-old daughter, and the rest is history. So.
Well, there's been a lot more with that history there. And so that being your first investment, had your husband done renovations before? Talk to us about that first project. Why'd you take it on?
Well, no, and we stayed married through the whole thing. He had a building that he inherited, as a matter of fact. He's from Brooklyn. He's a Brooklyn boy, but it was falling apart. So from the ground up, we renovated it. I had also invested in a couple of single-family homes back in Texas. The two ways to invest in real estate: cash flow and appreciation, right? And up here in the Northeast, a big majority, it's a lot of work to find cash flow stuff. I mean, you buy for appreciation up here, and I've never been able to make the numbers work. But we need it's great when you need a place to live. We still live there, actually. And we send our daughter to private school. We rent out 3 apartments. I've just always been very conservative. I grew up, in suburb of Houston, just middle class. Mom was a school teacher. Dad worked for Sun Oil Company. So from Mississippi and Louisiana originally. So I have relatives in the farming business and, all over the place, right? And a lot of them are all down south. So I ended up in New York, and I've not looked back, and I'm having a good time. I've had a good time from day one.
So you have this magnificent career, and you decide that it's not everything that encapsulates where you want to go when you start investing in real estate. What was it that pointed to real estate, and why'd you take that leap?
Well, so the government in our country wants us to invest in real estate, or at least the people making the laws, they think real estate is a great thing. And It drives a lot of our economy. You buy a house and it creates all kinds of jobs around that, right? So they give all kinds of incentives, right? When you buy rental property, you get to write it off like it's a computer in a business. I mean, you get to take depreciation, even though the house may appreciate. You get to write off depreciation. You get to write off all your expenses, all of those things. And we're in tax haven, tax hell here in New York City. And I was paying taxes like you would not believe. And it began to dawn on me when I started seeing mutual funds with capital gains on $65,000 and stuff. And I didn't take any money out. I was like, what? Wait a minute. How can I owe tax on 60 grand? And I didn't take 60 grand. I don't have 60 grand out of the thing. So when I started, and then I looked at my real estate investments, I was going, holy moly. But real estate investing is a lot of work, right? So you have to go find the house. You have to make the numbers work. You have to call the management company or go over and fix the toilet yourself. And I had a colleague and friend from Texas Tech University, where I graduated. And we were both on the board of Texas Tech's, School of Communications Advisory Board. And his name is Joe Fairless, and you may have heard of him.
If you listen back, Joe Fairless was on episode 3 and was also back again. I'll put it in the show notes. We know Joe well.
Back in the day, before he was famous. So
no, I think he was famous then. Now he's even more out there.
Well, I don't know. He was the beginning of his real estate thing. He hadn't written the book. He hadn't started the podcast. He hadn't quit his job in advertising. So,
yes.
Anyway, he decided to quit his job, and he invested. He had this apartment complex in Cincinnati that he wanted to buy. And I was one of his first investors. So I invested in that, and that's how I learned about the fact that you can invest passively in multifamily communities that are lower risk, I think, and that you don't have to do the work. So you own part of an apartment complex. Then the more I got into it, the more I discovered that a REIT, right, all the public investments that normal people have access to, by the time we're getting paid, everybody is skimmed off the top. I mean, it's fees after fees after fees. You don't even know what they are. If you look at a mutual fund and ever read the perspective, you'll just go, oh my God. I mean, you have to order it especially to even get the terms and conditions. And the summaries are usually online, and they're like 150 pages. So we're paying a lot of money for our 401ks, when you buy a stock, the stockbroker makes money whether you lose money or you make money. And I'm like, wait a minute. I'm paying $65,000 in capital gains. This guy is he's the one getting the tax benefits, right? When you hear about carry forward interest, that's what's happening with these funds. And wait a minute, I'm paying the taxes on it, and I'm conditioned to believe that 5%, 6% is good. And now I know that it's not good. It's not good.
So you have this time as a passive investor, and how did that lead to your progression in investing in more apartments to what you're doing today?
Well, Joe called me one day and said, I need to raise $1 million for the first deal he did after Cincinnati. You want to help me? Can you help me? And so I started helping him. So that's kind of how I got into this. And I had already been talking and telling all my family and friends about, what I was doing. There was interest there. And, it's one of the reasons why I decided to do what I'm doing is that there really is an overall lack of financial education in our country. Because part of it is that the people running the financial services sector, and I'm not talking about everybody, and they're not doing anything illegal. It's a club though, right? and you really have to, they almost don't want you to know, right? They don't want you to know because they're going to sell you the funds that they want you to be in and all of those things. It's really tough to find financial advisors that don't have a vested interest somewhere. Because if they work for somebody, you can bet they've got a vested in. I mean, they want the company they work for, whether it's Fidelity, whether it's Charles Schwab, whether it's any of them, all of them. They want, they pay their people to sell their stuff. That's what they do. It's not illegal. It's not bad. You're making money. So I don't want to, slam them, but it's just like, this is just, it occurred to me that my entire life savings was in something pretty much that I didn't really understand.
And you had very little control over.
Trump tweets, goes up. Trump tweets, goes down. I don't know why. And neither do the people that you're giving your money to.
So you look at these multifamily holdings today. How have you gotten your control back, and how have you basically enlightened other investors to why these investments make all the sense and you should be jumping into these full circle?
So here's what I do. First of all, you have to be an accredited investor to work with me, which is an entirely other topic. If you go to my website, keepmore.com, if you go to my website, I've got some information on, links to what an accredited investor is, but you can Google it and read about it. And
could you give us the high level just for some people that maybe haven't heard the term before? Basically,
you need to have made $200,000 as a single person, $300,000 if you're married, and or have a $1 million in assets outside of your primary home. So what they're saying is to participate in a lot of these private investments that I think are much more lucrative than, at least they have been for me. So I'm not an investment advisor. I'm not I'm not a professional investment. You've got to do your own due diligence, which I'll talk about in a minute. But they don't tell you. We don't have access to this stuff. You have to be an accredited investor. So if you're don't have that kind of net worth, you're not capable of making decisions where to invest your money. I mean, that's basically what they're saying. So there's a club here, and it's like, you're too stupid. You can buy a stock and lose everything, but you can't participate in anything that I'm talking about, and most of the things. Now, there's a few, and I do have a couple of things that I've been working on that we allow sophisticated investors to. And that's just, you self-certify, you say, yes, I'm an accredited investor. But people don't know what it is, and they don't know anybody that does this, because the financial advisors will not tell you to do this. Talk to an attorney. Most attorneys, that they get paid to not tell you to do things. So what's involved with it, a lot of people don't understand it. And so that's what I decided to do, was I spend my days helping people understand, what it is we do. And it's so simple.
So let's not talk specifically, but in terms of buying an apartment community, what does that look like? What is a general approach about what you're actually doing?
So what I do is I evaluate deals and look at, and then if I want to participate, I'll participate. And here's what I look for. And you can also go to my website. I've got a little thing you can download, a little booklet about, what we look for in an apartment, complex and in a multifamily home. And the first thing that we look for, you want me to go over it? I can go over it.
Absolutely. Yeah.
I'm conservative. Like I said, I started in this. My goal was to have $100,000 in 10 of these for $80,000 of passive cash flow, and then the tax benefits on top of that, and the appreciation on top of that. So, what I look for is a Class B property. And what that means is these are working Americans, right? If you look around most of the country, the new construction that you see are these, luxury townhomes, McMansions, all that, because to build something from the ground up, it really almost has to be for the numbers to work, right? What we look for is, the people I partner with, we look for apartment communities that are serving the managers at McDonald's, right? These are the people that make sure the hospital is clean, and they take your blood, and they do, all of those things. And it's an overlooked market segment. We take an apartment community, And these people, they're working and they want a good school district for their kids, that sort of thing. Some of them are going through divorces, or they've lost their house because they can't afford it. There's some of that. They've lived in a luxury townhome and they can't afford that, so they have to downgrade. And so what happens is that we go in, and it's so simple. We go in and they're find those that aren't operating efficiently. We increase the operating efficiency. We make computerized things, that sort of thing. We make them as people move out. We do the same renovation in every apartment. We're able to charge more rent. People will pay $100 for a covered parking spots. We'll build carports. We'll put in washers and dryers. These are people that maybe can't afford $1,400 to go out and buy a washer dryer, but they can afford, $25, $30, $50 a month. As a matter of fact, the first one that we bought, I was shocked. There was a waiting list for washers and dryers. It's owned by a, fund or something, somebody up in New York with a spreadsheet, and they don't care about washers and dryers, right? So some of them are owned by families. Susie's parents bought this, or Susie's grandparents had this, and it's been a family thing, and now everybody's gone. Susie's in LA, and she knows it's cash flowing, but she just really wants her, $19 million. That's what Susie really wants. So, we find situations like that.
So how do you find these situations?
Relationships. Talking to people like yourself, talking to, Joe, my relationship with Joe, and then Frank Rossler and other people that I've met through them. I mean, we get like-minded investors that are tired of, that really see the value in first of all, investing in real estate. And then they want to diversify from this crazy stock market. I mean, that's really I'm a big believer in, and anybody will tell you, even the financial advisors agree with this. Don't put your eggs in, everything in one basket. And, I've seen a couple of down markets, and I saw my parents. You see, the thing is, if it's a down market, this thing goes down, and the stock market, which everything that goes up will go down, you're forced to take money out. It's crazy. And so the government makes you do it when you get older. So, if you've got to get the money in a down market, you're in trouble, right? But with a multifamily apartment community, it's already cash flowing without us doing anything. So people have to have a place to live. If you underwrite it conservatively, plan for the downside, you look at history, look at the worst crash of 2008 and what happened to rents in Class B properties in Dallas, where we're focused, Dallas and Houston. And so we apply those metrics to the business plan, right? And so chances are, and we get a loan that if we need to hang on to it, we hang on to it. And so it works. It works, and I always like to look at the worst case scenario. There is no worst case scenario if you're in the stock, you're in the stock market. Wait, right? Well, if you're in your 50s or 60s and you're nearing retirement, you don't have a lot of time left to wait.
Yeah, absolutely. And if you're now building out this deal flow, and you're now growing your investor network, if say I'm new to the game, and maybe I just know this is the space for me, but I don't have the credibility. How am I building out that investor network and building out that credibility without really having the background or the past deals to showcase?
I think, again, it comes down to relationships. The other thing that I love about real estate is that people help each other. We want to see people succeed because we can participate in their deals. They evaluate deals that maybe they just don't have the bandwidth. Again, real estate takes work. So they might come across a deal where, oh my God, this is a good deal. Somebody really experienced, right? And they may say, I don't have time because I'm busy over here. And so can you help me with this? And that's a way to get started. There's a million ways to get started. Talk to people that need an investment, and believe in you, because they're investing in you at the end of the day. Can't take it personally, because I've had a lot of people that I really think highly of and I love that are just still too afraid to pull the trigger on this, and it just blows my mind. But
so let's talk a little bit to that. When you are talking to people who maybe have not heard of this concept before, give me some of the points that you want to get across to these people so they can understand the opportunity that can be presented by going into this sector.
Right. And if they don't invest, the timing's wrong, or they just don't understand. So I think that yeah, this is very conservative. It sounds like it's not conservative, right? If you're not a savvy investor, if you don't understand how my husband's a smart guy. He married me. He's got to be brilliant, right? But he, he's still he sees what's going on, and so now he believes in it. We've been to 3 CPAs, so he made sure that we weren't getting he's a New Yorker, so he thinks everybody's out to rip him off from the get-go. But I'm just an average person, right, that has lost money and made money, and I just have looked at a lot of things, and I just know that the fact of the matter is that from the beginning of time, from the medieval times, the king was evaluated based upon how much land he owned. This is from the beginning of time. This land and real estate has been a huge measure of success, right? And if you look at every high net worth person, I haven't met them. I haven't met a high net worth individual yet that doesn't say, yeah, I've probably made at least as much money in real estate as I have in the stock market or whatever. Even those people that, so real estate investing is just a really smart way to diversify your assets, right? And if you don't have assets yet, you got to talk to people. You got to go to conferences. You go to my website, download everything you can, go to Joe's website. My phone number's on there. My email's on there. This is what I love to do. And there are many opportunities if you're not even an accredited investor. I'm finding out things like that. So I vet them, and I personally invest in every single thing that we do. So a lot of times, mutual fund managers, hedge fund managers, they don't have any skin in the game, and I don't want to lose money, believe me, I don't want to lose money. So
the proof is in the pudding, correct? And
it's experience. You got to partner with people that are experienced.
So now that you've built out this, what would you consider to be your future plan with this business? Where do you see 5 years from now with what you're doing in terms of educating and bringing this knowledge to others?
I think keep growing, right? My network, I'm starting to partner with other like-minded people and evaluating lots of deals in different places. I think that I want to just really, I have 4 years left before my daughter finishes school, and I think that finishes high school, and I think that we'll probably leave New York, at least part-time, right? I happen to be in Cape Cod right now, working. So my husband and daughter are off playing, and I'm working. So it's a great lifestyle. And so I can't see myself retiring. I really can't.
As you grow into these other partnerships can be scary for a lot of people. Maybe they've been burned or haven't done their due diligence. What are some keys to evaluating a partner to make sure it's the right fit?
Well, first of all, they've got to be like-minded. I just told you the way I evaluate and look at deals. There are other people. You can make more money. You can lose your shirt. I have lots of friends. I've never done a fix and flip. I have lots of friends, and you can do this. I don't understand construction. I may eventually partner with someone that I trust and know very well to do a fix and flip. You understand construction. I don't have a clue. So maybe I'm getting to know you. You're getting to know me. You might be a good partner for me to learn about fix and flipping, like I did with Joe to learn about multifamily. Because nothing in business is rocket science, but you really have to learn the ins and outs and the pitfalls that can happen. And so I try to see what successful people do and do what they do, right? Get to know them and ask a lot of questions about how they do what they do. So.
And if you look at your growth as a whole in this, what have been some challenges you've faced and how have you overcome them?
Well, the first deal, so I do what I say I'm going to do. And the first deal I committed $1 million and I wasn't able to raise $1 million. And so I do what I say I do. And so I put quite a big chunk of money in the first, second, third, it was one of the, not even one of them, it was the best investment I ever made. We refinanced in year 2. I got 40% of that capital back.
Amazing. Right
away. I'm making, $25,000 a year on just that first deal. So, I mean, a few of those and you can really get some cash flow. And then the best part is that we really try as a group, when we liquidate an asset, we try to do what's called a 1031 exchange. So you can defer, because you're just deferring taxes. So I get these losses at the end of the year that say, like, I may make $25,000, but I have $60,000 in losses. That's enabled me to write off our income from our apartments that we rent out in Brooklyn. That's enabled me, you can write that off against passive income. So a couple, like we just liquidated one for a 25% IRR. We'll get into that another time call me and I'll go into a lot of that, but it's good. Trust me. It's good. And we liquidated and I was able to offset that income. So I took the money. I didn't 1031. I took the money because my other deals offset those taxes.
Wow.
So, there's all kinds of things that you can do and it's much more flexible than you have to sell the asset if you're in the stock market. To make the money, you have to sell the golden goose. With real estate, you don't have to sell the golden goose. And there's another thing called leverage about it. So that's why I like multifamily, because could I take money and go buy a house? Sure. But I'm going to have to work it myself all alone. If I've got a house, I lose a tenant, I lose a month's rent. You have a 300 unit apartment complex, somebody moves out, it's not the end of the world. You've planned for that. You planned for like 85, 90, percent occupancy, whatever the going rate in the market is. And then you lower that, or you raise that. Right.
And you talked about your end goal being in the beginning, investing in 10 properties over 10 years, $100,000 in each. Where do you see the future now for you?
I think so my daughter's name is Mary Quinn. And I just created an LLC called MQ Ventures. What the heck?
Got it.
And so, my goal is to teach this to her. Life is about options, right? It's all about options. So if she wants to live in New York, I just want her to understand that there are other ways. Everybody should get a job so they know what that's like and all of those things. But there are plenty of ways that you can have a great career without, that are much more, you get to keep more of what you are earning. And that's so I got the URL, Keep More. And that's what I'm about, is really looking at investments and just sharing, not even looking at investments as much as just sharing what I know.
That's amazing. If there's some words you live by, what would those be?
Treat others like you would want to be treated. There are like people that aren't honest in every business, right? I haven't found as many here because you've got to look for like-minded people and then develop those relationships. And so at the end of the day, it's been fairly simple and something that I really love to do. My real estate friends are becoming the closest people, in my life, my friends, right? So, I certainly have friends from advertising and marketing. I'm getting together with one tomorrow that lives on Cape Cod, but it's a different thing. So, and it's really people that are excited about, this is a great life, right? We only have, and so it's about doing some good things. We make places better to live, right? And I was selling market research, and it's nice to help a brand sell more stuff, but it's much more fulfilling to see people happy at where they live and to turn something from, help a neighborhood get better and all kinds of things like that.
So if people are looking to learn more about syndications, accredited investors, passive investments, I know we have keepmore.com. Is there another way that they should connect with you?
Yeah. They can call me, right? They can text me at 917-975-0143. That's my phone number. They can also, there are other people that I can put them in contact with as well. And Joe's certainly one. You're certainly one. I think we're all willing to share what we know pretty freely, at least that I experience.
Absolutely. Well, Holly, Thank you so much. From renovating your first property after getting married, a 4-unit in Brooklyn, to finding that there's 2 ways that you can invest in multifamilies: cash flow and appreciation, starting in real estate really because of government incentives and just how your current active income was just getting crushed by taxes, and just how you've transitioned into raising funds for apartments, and your site keepmore.com, and even your first opportunity to raise money, committing more than you had able to just really raise from the first start, and just keeping your commitment and what that says about you. Thank you so much for today. This has been great.
Listen, thank you. It's been fun, and I'm looking forward to getting to know your viewers and listeners and you better. So
amazing. Well, Holly, thank you so much. Again, this is the Real Estate Investing Foundation podcast with Jason and Peely. Thank you so much to all of you listeners, and thank you again, Holly Williams. You have a great day.
I sure appreciate it. Take care, everybody.
Thanks for tuning into the REI Foundation podcast. Check back next time for more awesome tips and strategies to launch your new you in real estate.